What is going on out there, peeps? All right, so I had a pretty good thread going with quite a few people who were asking about Basel III and how it's tied into gold and what does this mean. And as I'm going along, they're like, really, people probably need to know this, Pimpy. You should probably make a video. And I thought, I can make a real quick video explaining it, and I'm gonna do it and I'm gonna do my best to explain why it is important to consider having gold. So some of us are only gonna be able to afford silver, but right now, the silver to gold ratio, the silver is the right move anyways. Later on, as your coins become more valuable and the ratio of exchanging or swapping silver for gold coins it shrinks and it gets to a more reasonable ratio, then you might want to consider moving over to gold. It's a lot more stable than silver is, but right now we definitely know that silver will outperform gold. So let's get into that here in just a second. As a quick reminder, if you are considering putting money into precious metals, whether it's gold or silver, please give our friends over there at Money Metals Exchange a consideration. The link is in the description. If you follow the link and you go over there and you buy more than $100 worth of precious metals, they will give you a free half ounce of silver, okay? Make sure you use promo code Pimpy, P-I-M-P-Y, to get that. We have Pimpy's Investment Chat. It's the same name as the YouTube channel. In here, we talk about investment opportunities. No politics in here, please. Bring all the politics over to this group, which is the hidden things in front of your eyes. You can't talk about politics, current events. You can talk about QAnon here. You can talk about chemtrails, false flag events, the whole 9 yards. Also, as you guys probably know by now, I have Twitter. Again, I'm learning real quick that a lot of people have given up on Facebook a long time ago, and they only have a Twitter account. So I finally got one. The link to my Twitter account will be in the profile. All right, so come on over and join me. So let's get into this a little bit. So back in April of 2019, the Bank of International Settlement did something unique. They reclassified gold as a tier 1 asset. So it was at a tier 3. What that means is banks are to hold certain assets, and this is how their credit worthiness is determined, I guess is the best way to put it in a layman's terms, when it comes to issuing or buying bonds, issuing bonds, the whole 9 yards. So, they really have to hold, there's a criteria to it. So we're going to read about it in here real quick and see if I can explain it. The Bank of International Settlement under Basel III changed the status of gold as a reserve asset effectively on April 1st, 2019. Gold used to be viewed as it was viewed by banks as a risky asset and classified under tier 3. That's because the value of gold would fluctuate. You can see it right now. You see this happening both with gold and silver. This is why some of you, when we seen our first dip after we had seen a nice long steady climb on the values of both gold and silver, then when it took its first dip, people started to panic. That's why I tell you guys, don't panic on dips. Just leave it alone. Buy on a dip. So because of that type of volatility, and it was considered a tier 3. So what does that mean? So which means it is considered risky and could only be carried on the books at 50% of the market value for reserve purposes. Naturally, gold has historically been classified as a tier 3 asset because its value fluctuated to the extent that the value was reduced for the reserve status by 50%. So whatever the current market value was, only 50% of their holdings. So the total value of their holdings, only 50% would be considered when considering their credit worthiness, I guess is the best way to put it. Since the BIS has reclassified gold as a tier 1, now what a tier 1 means is there's no risk. So that means however much gold you're holding, whatever the market value is, you can see where it's going with this. Whatever the market value is of a gold, it is taken in consideration at 100%. It's a 100% no risk asset. Very interesting that they would do this. Makes you wonder where they're going with this. So its value is no longer reduced, but it's reflected as 100%. Now, people assume banks will run out and buy gold. The problem is that it is not a fixed price on the balance sheets, but is regarded only as 100% of the market value. No fixed value is what they're trying to say. While some claim that this makes gold a riskless asset in the eyes of the World Bank authorities, they failed to note it is market value. So it does tend to go up and down. So there is some risk involved. but I still think it's crazy that they moved it over to a tier one. I think there's something a bigger agenda. Cash does not fluctuate, so the dollar is still a dollar. So the US dollar and the government bonds are the only tier one assets, or considered tier one assets. Now gold has been moved there. Very, very interesting. Banks are not in a mad rush to buy gold and shift their reserve assets when they cannot employ gold in the banking business. True, there was once a time when banks cherished gold reserves, but that is when the gold was fixed on a standard. Yeah, a gold standard. Now, this article is saying that there won't be no mad rush for gold. That's not true. Look at this. The number of central banks buying gold is expected to rise substantially in 2020. According to the 2020 Central Bank Gold Reserves Survey, 20% of the central banks anticipate increasing their gold reserves over the next 12 months, compared with just 8% of respondents in the July 19th survey. We know that they have been storing up a ton, not just a little. We also know now there are a lot of people making a move towards gold. So this article was wrong. But can you see what the issue is here? So if they're taking a look at the bank's asset levels, and gold is now a tier one, that means all of its market value is taken into consideration. So what do you think the banks will hope happens to the value of gold? Yes, go up. As a matter of fact, there's a lot of anticipation that although this article tends to make it look like there won't be no mad rush to gold, and that, banks still will think of it as kind of risky, but Basel III has changed things, and now the Bank of International Settlement has moved these to a tier one. No, it makes sense to me what's going to happen. You see, still they'll be paying attention to the market value of gold. There will still be fluctuations. The reason for that, and don't think that these won't be controlled somehow, the reason for that is to make people, give them the impression that it's too late to own gold and that it's still kind of risky. When the truth of the matter, the banks know that they hold the gold the more they hold. And if they could get the market value to increase, that increases the amount of assets that the banks are holding. What does that do to us who are holding gold? It increases in value as well. So there is a mad rush. This is not being honest. This is why I'm saying we got to consider trying, if you can, just try it if you can. Try to pick up gold. If not, that's okay. Buy as much silver as possible. When the ratio, because I think right now it's like 70 ounces of silver for every 1 ounce of gold, I think is what the ratio is. When it gets closer to something like 30 ounces, then you might consider swapping some of your silver for gold. You might want to take that into consideration. All right. So holding on to gold, what we're anticipating is this. Since Basel III has now made it a tier one asset, that there's no way in heck there's going to be huge fluctuations, and there's no way in heck it's just going to stay down. Obviously, what's going to happen is to increase the assets that are on the book and also look a lot more creditworthy. You're going to see the value continue to rise over time. So you see, gold is not just a short-term investment. It's something that you should take in consideration as long-term if you can afford to do so. But if not, still again, silver will outperform gold. So when it gets up there in value, there you go. And the ratio changes, do your swapping. Now, Andy Shipman says something very interesting. I want you to hear what he's saying because he talks about the same thing.
Let's begin today's discussion with gold, which has recently surpassed its all-time high since we last spoke. But this is no surprise. You forewarned us this would come to pass in our previous discussion back in December 2019 regarding the Bank of International Settlements and Basel III and its impact on gold. For those that missed that conversation, can you please shed some light on the importance of Basel III?
I'm just curious real quick. I want to see something. What was the market value of gold in April 2019? Let me look at this really super quick. Okay, because that'll kind of give you an idea what's going on. So yes, that article said there will be no rush on gold by banks, but that's not true. They have been gobbling up tons of it. All right, so that's not that should be expected, because if you think about what they're trying to tell us, what they're trying to say, and that is, their assets and how much gold they have. You know what I mean? It just makes sense to me that it's going to continue to go up and go up. Plus, it's listed as a tier one. All market value is taken in consideration. I think we're going to see the opposite of what they're trying to tell us. Let's see here. Well, if we can hear up and move, I'm sorry, it's moving just a little bit, but I want to see where gold was. I think it was somewhere around $1,200 in April of 2019. So let's take a quick peek at where it was, because I just want to show you and make a comparison. So real quick, as soon as this thing can move, there we go. All right, so I'm thinking that gold was somewhere around the $1,200 mark, April of 2019. Nope, let's go back just a little. Sorry about that. So where were we? Here we go. You can see where gold has been since, look at this. Since September 1st of 2018. Look at this. The difference in look at that climb. But let's look at real quick April. So in April of 2019, it was at $1,282. And since then, it's gone up at least just a little over $700 in that short period of time. That's a pretty good sized jump. That's more than 50% of that current value at the time in 2018. All right, that's a huge jump.
Yeah, it's the most significant event of my career, and really, if people were to take a broad look at this and understand what it really means, quite frankly, I don't think you need to know anything else. Everything else that we see is just noise. Since 1944, there's only been one tier one asset, and that has been United States Treasuries or fully funded dollar deposits. Gold was considered a tier three asset, where only 50% of its value was allowed to be calculated on a balance sheet. Therefore, there would be four reasons that central banks would be de-incentivized to own gold. It wouldn't pay interest, cost money to store. It was unpredictable in its movements, but the tier three status meant that a 50% denigration on the balance sheet would limit a central bank's ability to sell bonds or transact international business. So really the only purest form of collateral, and by the way, if your listeners were to Google tier one asset, it's listed as a riskless asset. So the Bank of International Settlements, which is the central banker's central bank in Basel, Switzerland, reclassified gold April of 2019 as the only other tier one asset in the world.
What the Bank of International Settlement is saying is on gold, there's a riskless. There's no risk to it. So I'm thinking they're anticipating that gold will continue to climb over the years. Do you see what I'm saying? So the market value will increase. You might see some pockets of fluctuation where it'll drop down a little bit, but it's going to continue to climb and climb and climb. There's no way in how the BIS would risk moving gold to a tier one unless they knew something about gold, that gold will not drop down again in any significant amount, or we are going to the gold standard. Therefore, the no risk means they're going to set the value really high. That will be the minimum. You see what that article said. The only way that gold should be at a tier one is if we went back to the gold standard. So yeah, you should be smiling, especially if you own precious metals. I keep telling you guys, you need to go get some.
Next to US dollars and treasuries. So since 1944, there's only been the dollar and the treasury bill that would give a tier one status for central bank and commercial bank collateral. Now, with gold brought up to that table, it's important to note that the central banks of the world front ran this decision. In 2018, they bought more gold cumulatively as a group than they did in the 60 years previously. And in 2019, those numbers were up 90% and continue unabated higher now.
So in that article, it says that banks would not rush on it. But he's saying in 2018, collectively, all the banks bought more gold than the previous 60 years combined. Then they increased their gold holdings an additional 95% in 2019. So you see, they definitely know something's going to happen with gold. This is the only reason why I could think why it is that they moved gold from a tier 3 to a tier 1. Either they know we are going back to the gold standard and there will be a set value on gold, which you should be smiling because a lot of us are really anticipating that number to be closer to what the debt clock has. Or they figure the markets will continue to determine the market value and it will fluctuate, but not enough for anybody to worry. In other words, over the long term, it'll continue to rise, rise, and rise.
And so you're seeing the most sophisticated, well-funded, well-informed traders on the globe accumulate what they call a riskless asset, and have been front-running that decision, of course, now for over 3 years. So I think it's only a matter of time before gold goes higher than anyone thinks possible. And they'll continue to let it move up at this methodical pace with volatility inside of it to keep people from really making a committed move to it. And before long, they'll look at it and say, geez, we really missed the boat. We waited too long. And I don't think that's the case right now. But I think that will begin to be conventional wisdom for most people. They will have thought that they missed the boat. I think it's going multiples higher where it is now.
Do you hear what he's saying? So what's going to happen is it is where it is right now. People are going to procrastinate. Then all of a sudden you're going to see a pretty sizable jump in value. Then people are just going to give up. You're going to see people selling their gold because they're happy they got this huge gain. You're going to see people who think they missed the boat and they're going to anticipate that there's going to be some type of adjustment and see gold go back down. Therefore, they're not going to buy none and they're going to think they missed the boat. No, he's saying, no, don't fall for that. It's going to keep going up, and they're going to keep doing that. I was talking about this before, that don't be surprised. Gold, they might not announce an official gold standard, but make no doubt about it, you might see huge leaps in value for both gold and silver because they're going to need to be revalued. All right, so don't miss that. So try to stack up as much as possible. All right, try to do what you can to keep buying gold and silver. But once you get it, and it jumps up to a pretty high price, don't rush out to sell it all. You know what I mean? I showed you guys a video about a guy saying how he's going to retire on 10,000 ounces of silver. How he said he would sell 400 ounces, and he was anticipating $18 an ounce, which is super conservative, would give him $7,200 a year on top of his retirement pension. That's a pretty good sized chunk of moolah that he gets to add to his already existing pension, $7,200. That's only 400 ounces out of his 10. That means he could do that for 25 years. Now think about where you are on your retirement pension. Now think about where silver is if you buy 10,000 ounces. Now just imagine when you got time, you get to every year, and this guy is just saying if it's fixed at $18 an hour, we know damn well it's not going to be at $18 an hour. It's going to be much higher. As a matter of fact, it's at 27 now, and it has there's no way in God's green earth it's going to stay there. It's going to continue to climb. So you might not be able to afford 10,000 ounces, but maybe you can use the same concept as this man. Instead of doing, well, you know what? I want to be able to afford $7,200 extra per month, but $18 is really low. So maybe you can anticipate it at, let's say, $25. So you don't have to sell 400 ounces every year. Maybe you don't have 10,000 ounces. Maybe you only got 5. Maybe you say to yourself at 25, man, I can afford, to sell 200 ounces per year. That's a pretty good addition to your already existing pension payments that you're getting. Do you see how that works? So just get it collected, and then slowly, when you need to, turn it in and sell it. But make no doubt about it, gold and silver are going to see for the next 10 to 15 years constant increases in value. And the fact that the BIS has now moved gold into a tier 1 riskless asset means they anticipate gold being very valuable for a long period of time. So I had this conversation going with a handful of people, and they were like, "No, you need to let people know about this. It's important. It's another reason why they should consider moving into precious metals." I know a lot of you have moved your IRAs over. Congratulations. All right, but you can see what I'm talking about. All right, we're anticipating some huge things. A once in a lifetime transfer of wealth like we've never seen before. All right, so have faith in your investment. I know you're watching the markets, and don't get panicky about them. Ignore them. Ignore them. If you watch them every day, you're going to go crazy and go bald. All right? So don't. Just kick back, relax. I'm anticipating some pretty big things happening this year, but make no doubt about it. I just showed you since April of 2019, it went from, $1,200 an ounce on up to where we are now. It's over $700 in just a little over a year. That's a pretty good sized jump. All right? And this ride is not done. Keep in mind, it was above 2,000. That's over 800, just shy of $800, $800 increase in value. All right, you guys, I wanted to share this with you because it's really important. So if you're thinking about moving to precious metals, please do give our friends at Money Metals Exchange a consideration. It's never too late, you guys. It's never too late. Stop procrastinating and find ways to add to your collection. All right, if you liked the video, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later.